Hello traders, and welcome back to Explain the Charts. Today is September 29th, 2025, and we are taking a close look at the New Zealand dollar versus the US dollar, NZDUSD. There's a lot happening in the news that's directly impacting this pair, followed by some very telling price action on the charts. Let's start with the fundamental picture before we dive into our technical analysis. The dominant theme in the market right now is US dollar strength. The greenback has been rallying, largely driven by strong U.S. economic data that suggests continued resilience. We've seen reports of a sharp drop in jobless claims and a stronger-than-expected revision to Q2 GDP. This data points to a robust labor market and a solid economy, which typically attracts foreign investment and boosts the dollar. Interestingly, this is happening even as the market anticipates potential rate cuts from the Federal Reserve. Fed Chair Jerome Powell himself recently described the Fed's position as a challenging situation. It seems that for now, the positive economic data is outweighing the dovish signals from the Fed, keeping the dollar strong. Another major factor creating uncertainty is the looming U.S. government shutdown deadline on September 30th. These shutdowns can be unpredictable and disruptive, adding a significant risk-off element to the markets. On the other side of the pair, the Reserve Bank of New Zealand is in a transitional phase, with an interim governor appointed for a 6-month term. The key piece of data everyone is waiting for is the U.S. Personal Consumption Expenditures, or PCE, price index. This is the Fed's preferred measure of inflation, and the results will be critical in shaping future monetary policy decisions. A higher-than-expected number would likely add even more fuel to the U.S. dollar's rally. So, with this backdrop of a strong dollar and major event risk, we would expect to see bearish pressure on NZDUSD. Let's pull up the charts and see if the technicals confirm this story. Starting with the daily chart for a long-term perspective, the story is clear and powerfully bearish. Since peaking way back in late 2024, near the 0.635 level, the pair has been in a sustained downtrend. We can see multiple periods of extreme selling pressure and high volatility. There have been several days with massive drops of over 10%, which is extraordinary for a major currency pair. Let's just zoom in on one of these periods to highlight the sheer force of this downward momentum. If we look at November of 2024, you can see these two massive red candles on the 8th and the 15th. These moves wiped out huge amounts of value in a very short time, establishing a clear bearish market structure. Price has consistently made lower highs and lower lows for the better part of a year. Coming back to the current price action, we can see this downtrend has continued. We've recently fallen from a resistance area around 0.598 earlier this month. The price has been steadily declining, which perfectly correlates with the news of renewed US dollar strength we just discussed. The price is now approaching a very significant area of support. Looking at the recent lows from September 25th, we can establish a key support level right around the 0.575 to 0.576 area. This is the immediate floor that bulls need to defend. On the upside, the first major resistance is the high from a few days ago, around 0.586. Above that, the psychological 0.59 level and the early September highs near 0.598 are the next major hurdles for any potential recovery. Now let's switch to the 15-minute chart to get a detailed look at the most recent price action from the last few sessions. As you can see, the downtrend is very clear on this lower time frame as well. On September 24th, the price was trading around 0.586. From there, we saw a steady cascade of lower highs and lower lows throughout the 24th and 25th. The selling pressure was consistent, pushing the price down through multiple potential support areas. The decline eventually found a bottom around that key 0.5754 level on September 25th. Since then, the price has attempted a minor recovery but has struggled to gain any real traction. We've been consolidating in a tight range between roughly 0.575 and 0.5778 over the last day. This consolidation right on top of a major support level is critical. It often represents a pause before the next significant move. The price is currently hovering around 0.577, showing some indecision. So let's recap the key levels and discuss the potential scenarios heading into the rest of the week. Our critical immediate support level is at 0.575. The immediate resistance to watch is the top of this current consolidation range, around 0.5775 to 0.578. Further resistance sits at 0.5815, and then the more significant level at 0.586. Now for our unbiased outlook. Given the strong fundamental tailwinds for the US dollar and the clear technical downtrend across all time frames, the bearish scenario seems more probable. I would place the likelihood of this scenario at around 65%. In this case, we would look for a decisive break and close below the 0.575 support level. If that happens, it would signal a continuation of the long-term downtrend. This bearish view would be strongly reinforced by a hot US PCE inflation report. On the other hand, a bullish reversal is still possible, though less likely. I'd put this scenario at about a 35% probability. For this to happen, buyers must aggressively defend the 0.575 support level. We would need to see a strong push above the consolidation resistance at 0.578. A break above that level could trigger a short squeeze, with an initial target of 0.5815. This scenario would become more likely if we get a much weaker than expected PCE number, or if positive news emerges regarding the US government shutdown, causing a temporary dollar sell-off. The main thing to watch is the price action around the 0.575 level and the upcoming PCE data release. That wraps up our analysis of NZDUSD for today. Thank you for watching Explain the Charts. If you found this breakdown helpful, please hit the like button, subscribe, and turn on notifications so you don't miss our next video. Trade safe, and we'll see you next time.